The broadcast is now starting. All attendees are in listen-only mode.
Good day here. Just want to check we're all set up and there's my sound. Sound should be good. Welcome everyone. Welcome. My name is Adam Harris from Trade with Precision, and I want to just trying to have a look. I want to have a look at something quickly. There's my webcam. Let's see what it looks like. Okay, so welcome everyone. First of all, my name is Adam from Trade with Precision. Welcome to today's sort of strategy and focus webinar series. We're going to talk about making small gains, which then add up obviously with high frequency trading. First, couple of things I want to check. Can you hear me? So I'd love for this to be as interactive as possible. Please do not be shy. If you have any questions, I would love for you to ask them. Just type them into the questions box and I will get to them when I can. Secondly, I'm curious, can you see me on camera? And is it frozen or am I moving? If you could let me know you can hear me and you can see me on camera, please, because I can't see my webcam thing now, but it says I am on, and there we go. So if you can let me know, thank you. Show all webcams. Let's have a look. Oh, there we go. There I am. And so my name is Adam Harris. Let's kick off and get going. This is being recorded. I'm not sure if there'll be access to the recording, but I am recording it anyway. And let's kick off. So there's a risk disclaimer. I need to give you a moment to process and digest. And while you're doing that, I'm going to tell you a little bit about myself. So I am based in South London. So I'm in London, in the United Kingdom. I finished my day trading session about an hour ago. So I normally will day trade from somewhere around 7 a.m. until 8:30 or 9 is usually where I find most of my trades. I'm looking for them on the 15-minute, the 5-minute, the 1-minute. And I'm quite excited to talk about that today because I love it. It's great fun. I enjoy doing it. So my routine is that usually I day trade the London Open session, which is 8 a.m. I'll show you how that looks. I then may also trade the US session. And then usually at about 7:30 UK time, or a little bit later. Last night, for example, it was at about 9. I run through the daily charts looking for end of day setups. So collectively, I probably don't trade more than about 2.5 hours a day, but it is spread out. It starts first thing in the morning, then in early afternoon, and then at the end of day as well. Okay, so the reason I do that is because there are opportunities which form on different time frames, but also my schedule, I almost always am able to place trades at the end of day, but my schedules during the day can shift. I might not be able to make the US session. I might not be able to trade the morning session. Maybe something doesn't happen in the morning session, but it does happen in the US session and I can't make the US session. So out of a habit, I do that. I also manage my own stocks portfolio and I trade options. Okay, so I've got a relatively full life when I'm not speaking and presenting, but I do enjoy this because I work at home. It's a beautiful office, but I am alone all day and it does get a bit lonely. So on the agenda today is how to develop a scalping mindset, why it's best suited for active traders that revel in candlestick analysis, how to trade the 1 and the 5-minute charts to find short-term opportunities. We're going to go and have a look at the live charts. We'll go and have a look at that. I want to talk to you about why spreads are incredibly important. Okay, so in other words, what I'd like us to do today is to create a list of which ones traders tend to focus on for day trading purposes, for scalping purposes. Okay, scalping for me is a bit of a dirty word. It isn't for everyone else, but for me, I kind of feel that scalping is it implies that we're kind of doing something differently. But actually, what we're really going to be doing is looking for small moves on very low, not small moves. We're looking for normal moves on lower time frames, on the 1 minute. And they appear to be small because you might have, a 5-pip stop loss, and so it might feel like it's a very small move, but actually it's proportionate. It might be a 3-to-1 with trend type of setup. So I'm trying to put something on here. There we go. Talk about the most popular scalping strategies and how to turn theory into practice. Why low volatility assets are often preferable for scalping, since the priority is small gains and not large moves, meaning that it's lower risk. Okay, so let's have a look at that. Let's go through this. We'll do a live market analysis. We'll go across to the platform. And while we do that, so let's go across to the platform and let's have a look at a couple of different ways of doing this. Okay, so I'm just going to bring this up to speed, which is this one and this one. And this is where we are now. Okay, so I think there's a couple of rules that I want to impose. Scalping, this is really, really important. I think my issue with scalping is that it isn't that it's outright said, but it's often somehow arrived at. People get to the place where they think that it isn't rules-based, but scalping has to be rules-based. If anything, it is probably the most volatile type of trading situation. The markets can bob all over the place, and we tend to have very tight stop losses, and you should always trade with a stop loss, always, 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 because it's very small gains, and those small gains can be wiped out with one single trade where there isn't a stop loss. Okay, so in other words, the discipline to have our stop loss in place and have it get hit is the most crucial when we're scalping. Okay, so there's a couple of rules, right? So the couple of rules is, first one is scalping, and I'm going to say scalping here, but I also mean trading 15 minutes, 5 minutes, and 1 minute. Must be rule-based. Okay, so then the question is, well, what are the rules? Always, in fact, I'm going to do this in capital letters, always trade with the trend. Next, 3. Can you see that? Listen, feel free to just make comments. I'm not going to call you out by name, but it is very important to me that I feel that I'm making sense to you, that the words I'm using make sense, or the things I say make sense to you. And if they don't, you need to let me know, because I might have to say it a different way. And there might be something you want to know. You might have a question. You might be, look, can you just confirm this and this and this? So please don't be shy. Always trade with a trend. This is the next part. Every entry into a trade is either a pullback, okay, which is also known as a retracement, or a breakout. That's it. There are no other ways of getting into a trend, okay, or into the market. We always want to trade with the trend, but also trade in line with the higher time frames. Okay, so we're going to go look at that. We're going to go do that. 5, price structure, price or market structure is key. What does that mean? Where are the important levels I need to watch? 6, use the 4-hour for direction. So let's get started with this, and let's go and do this. So I'm going to put this one in brackets, okay? There's a couple of things you can do. Few things you need to know is that trading is a numbers game. And there's this thing called survivor bias. Now, survivor bias means that sometimes after something happens, we tend to look back and we draw the wrong conclusions. So it came about when, after World War I or World War II, the planes that had survived the dogfights would come back and land back at the airports, and they would look at the planes that survived and see that there were lots of holes in them, and the plane had managed to survive. So their first instinct was to put more protection where the holes were. But actually, it's the other way around. The holes obviously didn't destroy the plane was still able to fly, so they needed to add protection where the holes weren't, if that makes sense. That was the crucial areas. And so the same thing happens when we make a decision and then the outcome is negative. So in life, whenever we have to make a decision and there's consequences, and the consequences don't turn out the way we want, not the way we expect, but the way we want, because in trading we know that the market can go only up or down or sideways, and we can be right or wrong about the trade, about where we think the markets are going to go. That's not really a reflection on us. Even the best traders in the world cannot predict consistently what the market's going to do, because the market changes its mind over time. However, with practice and experience, we can predict most of the time the market's direction. So even if we predict it directly, it can still change. Even if we're right in the beginning, after a few minutes or after a few hours or a few days, the market can change and come and stop us out. So we can be right about where the market wants to go and is unable to go. So it's not really about us being right or wrong. It's just about kind of what the market is telling us. Survivorship bias means that if we have a losing trade, we often look back and go, well, it must have been a bad trade. And actually, it's really important that as a trader, you know the difference. Every trade we take, we either take based on its evidence, right? So we either take it and it was a good trade setup. And even if it's a good trade setup, please remember what I'm about to say now, even if it's a good trade setup, it can still be a losing trade. So the problem is that we could take a bad trade setup and it can be a losing trade. We could take a good trade setup and it could be a losing trade. And because it's a losing trade, we don't know whether it was a good trade or a bad trade necessarily. And we often tend to assume it was a bad trade setup. And it's fine. If all the trade setups that are losing trades were still good trade setups, that's good. That's what you want. You don't want to be taking bad trades that are losers. You want to be taking good trades, or you're losing trades. You want them to come from good trade setups that happen to be losing trades. So this is really, really important. I'm going somewhere with this. Basically, it's a numbers game. We want to try to always, every trade we take, we want it to be based off a set of rules that tells us it should be a good trade setup, even if it's a losing trade. Even if it's a losing trade, that doesn't necessarily mean we did something wrong. And that's why it's often important to review our trades, basically to go, was it a good trade setup or not? Because we need to know if it was according to our rules. A lot of people, especially when they scalp, it's much more emotional. And that is definitely something I want you to take away from today. Scalping is way more emotional than trading the 4-hour or daily. So if you go down to the lower time frames, you tend to have to be more experienced, or you're going to have to take more time to understand how to do it. If I take an experienced trader who does scalping, they've usually taken quite a bit of time, or at least 1,000 trades, to really nail down their emotions and to nail down their approach. And a simple approach, which is just, based on numbers. In other words, if I just do this 10 times, I will make more money than I'll lose. So first of all, let's talk about this. Always trading with the trend. If we trade against the trend, we're going to have way more losses. We could have 6, 7, 8, 9, 10 out of 10 losing trades if we trade against the trend. Trading with the trend, we should have on average 6 out of 10 winning trades, if not more. But on average, 6 out of winning trades. So trading with the trend, that's the rule. So if we are trading the 1 minute, we should be trading in the same direction as the 15 minutes. In other words, the idea of which way to go should be matched on the 15 minutes and the higher time frames. Every entry is either a pullback, retracement, or a breakout. In other words, it's either a pullback or a breakout. Let me show you this, why that is. So if the market is going down and it pulls back, the worst times for us to get in on a move is in the second half of the move. In other words, once it passes that point, it's usually the second half of the move. That's the worst time for us to get in on a move, because a big chunk of the move has already happened, and then it's usually doing the second half of the move, more or less. What happens is people are nervous, newer traders are nervous, and so they tend to wait and wait and wait, and they kind of jump in here, at which point the market has now completed most of its move, and it now starts to pull back. Okay? So that's the worst time to get in. The best time to get in would literally be any other time before that, which means any time in this area. As soon as it starts to pull back, you can start looking for entries here, 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 and the last place you can get in is on a break. So this is the pullback area, so when it's pulling back, and this is a breakout area. So does that make sense, guys? So that means that if you're trading with a trend, you're going to start looking for an entry somewhere in this area, and the last point you're going to get in is when you break and create a new low. So you're looking for an entry somewhere in this area. And that's a sweet spot if you can get it, and that's also valid. And different traders, me or you, will have different preferences. You can do both. You might find you prefer pullbacks. You might find that you prefer breakouts. But beyond that, suddenly what's happening is the probability of the distance it's going to move starts to drop. So the risk increases, meaning that our average trade, and I think this is another thing I want to add to the list. Okay. Okay, let's talk a little bit about probabilities risk, reward, I guess, and statistics. Okay, so statistics, all I mean by that is numbers of trades. 10 trades, 20 trades, 50 trades, doing the same thing. It can be on the same pair if you want, but it has to be the same setup. It has to be a head and shoulders setup, or a double bottom, or a double top, or a breakout with the trend. It has to be that. And by the way, on that note, the simple stuff is the best. The simple, don't overcomplicate it, simple things is what will make people rich in the end. Not overcomplicating it. If you're overcomplicating it, you're going to pay the price. It doesn't work. You're going the wrong way. So it should be something really simple. So statistics just means number of trades. Let it play out over a number of trades. Probabilities refers to the odds of it actually being a winning, or the odds of the market going in the direction you want it to go in. Or let's put it a different way. Probabilities is the odds of the market, of you reading the direction the market wants to go in correctly, because the market is communicating to you what it wants to do. So the purest form of doing this is purely price action, just purely price action. So let me open up, let's look at euro dollar. Let's open this up. Let's go to the 1 minute chart. Let's remove this. So we're doing purely price action. Leave that there for now. Okay, so what's going on in the 1 minute? I'm not going to look at the higher time frame. I'm purely looking at what's going on here. This was an uptrend. So you've got a series of higher lows. We broke through there. We've continued up. However, we've now done something. We're potentially in an area where it could change direction. Okay, there could be a level of market structure here. We could go up from here. The point is the trend is currently up. If we break this, then the market is likely to come down to this level. And then it gets messy. We lose a trend. Let's say this closes as a bullish candle. So I've got a little clock here. I've got a little thing I found somewhere online. So I can use, where's my clock? Candle countdown. So I'm just going to do this. So I have a candle countdown. We've got 25 seconds until we take the trade. I should be doing this with I'm going to do this because this is what I'm looking for. So I want to see if price holds. And I ideally want to be taking a trade. Okay, so do I have this? Let me just see if I've got the script as well. So if this holds, potentially, I'm going to be looking to take a trade. Only if this level holds, and it's not. Price is not holding. So this kind of uptrend is not looking that good. Those are our levels on that. So we need to, one of the things, as I said on the list, is we need to identify what's our market structure. So this is very important. Not just what is the market doing in terms of its lows and highs, but where are the key market points? And we can see them here. So there's a couple of other rules that we want to impose as well. We're going to make our money generally between the levels, but the safest setup is not just buying, like just selling between the levels. It's when it's also here, like a breakout. This is a very nice little breakout. That was actually another little breakout to the upside. These become individual candlesticks that give us signals. And actually on that note, we need to talk a little bit about momentum candles. So this is a momentum candle. What is it? It's usually a candle that breaks free or breaks out of a consolidation and is an indication that it is likely to take off. So if you look here, for example, we've got a nice level. There's a nice little momentum candle that breaks out. And if one places an entry above the high of that as a continuation, there could be a potential move to the upside. One of the dangers of scalping is not knowing how long the move is going to be. And this is something where I might push back. So we do want to pay attention to the individual candlesticks. However, just trading it for one candle is one type of approach. Do we want to trade? Do we want to do 1-to-1s or 2-to-1s? So let's talk about that. So this is reward to risk. So the probability, before I do that, talk about probabilities. So probabilities talks about how strong the move is. How likely is it that that market is really going to make the move? We don't always know how far the move is going to go. Sometimes it's only going to go a little. Sometimes it's going to go a lot. And it's very difficult. And no trader in the world can really predict with a high degree of certainty definitely how far the move is going to go. So we have choices. We can trade. So now we talk about the third part. So now we can trade 1-to-1, which means a reward to risk of 1-to-1. We could do 2-to-1. In other words, we risk 1% to get 2%. Or we could do 3-to-1, for example. Now, most traders I know will only do 1-to-1 or 3-to-1 on average for their average trade. So let's talk about 1-to-1. This is also very important. Let's talk about 1-to-1. 1-to-1 is often, this is my criticism with scalping, is no stop losses. There's no fixed target, no rule that says I have to take profit at this point. It's just sort of winging it. And this is where people lose money terribly and why they end up moving their stop loss, because they didn't really have a plan to get out. And so there's no fixed rules. And this is, it's how people wipe out their accounts. So it's very important that we have a fixed rule for what is our take profit target, and that we follow through. And therefore we have our stop loss. And then so the reward to risk is stacked in our favor. So let's talk about when 1-to-1 is appropriate. Now, how many of you know about the head and shoulders pattern? Okay, it's a very famous pattern. It's a change in trend. Usually what happens is once we break through, this is the left shoulder, this will be the head, that's the right shoulder. Once we break through the neckline, there's usually a move from here down, which is equivalent to that. So this type of move happens. Head and shoulders move. You get an inverse head and shoulders as well. It's a great one, okay? This particular pattern, ladies and gentlemen, has an 83.04 probability chance of hitting 1-to-1. So if you said to me, listen, I don't really care what I trade. It doesn't have to be cryptos, and it shouldn't matter. It shouldn't matter. The pattern, the setup, the strategy matters. Unless there's a pattern that only occurs on euro dollar or dollar yen, then you would only trade that. But most of these patterns are universal patterns. They will work wherever we see them. So head and shoulders pattern is a 1-to-1 pattern. And it has an 83% chance of success. So if you just decided I'm going to be boring and I'm going to be focused on this, I'm going to be like a student who's just going to work hard at mathematics, for example. It's not exciting, but I like it and it works. 1-to-1, head and shoulders is the best strategy. No brainer. It has the biggest win ratio. So that means that out of every 10 trades you take, as long as they match a good head and shoulders pattern, as long as you put your stop loss in the correct place and target in the correct place, you're likely to win 8 out of 10 of those trades. So in other words, your probabilities and your statistics act in your favor. The risk reward does not act in your favor. So in this particular strategy, that is not really a factor. That is, and that is. So it's a great way to go. And for beginner traders, actually, I would recommend that. You can do it on the 1 minute. You can do it on the 5 minute, the 15 minutes. You learn how to identify head and shoulders patterns, and you just trade those for 6 months. You will, first of all, imagine what your confidence will do, because you have a plan. You know what to do. Then you know how to, your eye will learn to identify those head and shoulder patterns. So you get strong. You'll start to see yourself in the beginning. You'll make a few mistakes because you're not quite picking the head and shoulder patterns, or you're moving your stop loss, or you're doing emotional things. You're doing different things, and your eye hasn't quite adjusted to it. When I was a kid, when I was young, so when I was 14, my best friend and I grew up in Cape Town. So I grew up in Cape Town in South Africa. I'm very lucky. I spent a bit of time in the bush, so we did a bit of hunting. And by hunting, what I mean is like guinea fowl, little birds and stuff, not big animals. And if we did, it was always to eat. So you would kill a kudu buck, a big buck, and then that would feed the whole village. Like, this is friends of ours who owned a game farm, so we would go to it and it would feed the whole village for a month. So that's what you did. So, I mean, in hunting in principle, I'm not a fan of, but to kill to eat, that was the plan. So that's not really what the story's about. The story's about that when I was a kid, my best friend grew up in Rhodesia, which is now Zimbabwe, and he grew up in the bush for real. And so we were, for fun, we were in the waters. So we were staying at a place, my parents and we went for the weekend. We were staying at a place called Langebaan in Cape Town, which is a research area for they like to research the ocean life. So they're looking at seashells and they're looking at sand sharks. And so sand sharks exist there, and they're just big, like they look like stingray, but they're very harmless. And of course, what they do is they bury themselves in the sand. So I'm telling you, there's a point to the story. So they bury themselves in the sand. And what he and I were doing for fun was we were like, the water was about this deep, and it was this deep for a very long way. And we were walking through, and he would go, oh, I see one. And I would look, and I was like, I cannot see it. And he would like, no, there it is. So, and then eventually we'd move closer, and then it would move, and then I would see it. And I think by the end of the weekend, we'd done it like every morning. I was able to start to see them because I wasn't able to see them first. It's a bit like spotting a leopard in the bush. If you go and you're just visiting a wildlife reserve and you want to see the wild animals, then you don't always spot them. But the game ranger often spots them because they know what to look for. So that's the same thing. So you need to understand that your brain is this incredible, powerful pattern recognition machine, and you need to provide it with samples. You need to show it head and shoulders. You need to show it like 100 head and shoulders. And then it will be able to spot them. And not only that, because it'll spot them, you'll be confident. You'll be like, wow, actually, I'm pretty confident that I'm looking at one. And then you need to trade it because you need to condition yourself to put your entry in correctly, to not risk too much, to let the numbers play out, to trust the process, to control your behavior. You've got to regulate your behavior over and over again like a habit. And habits are formed. We have to form the habits. So in other words, you need to make yourself the trader you want to be. So that's a fantastic task. If I was taking a brand new trade, I'd be like, okay, for the next month, all you're going to do is trade head and shoulders. And then we're going to review your behavior. What comes out of that is first they go, okay, I have one system that I know definitely makes me money. 2, my confidence is up because now I know I can do it. 3, I have formed good habits. I've learned how to calculate my risk. I know how to use the platform. I know how to do all these things. So there's all these really good habits that come out of it. And if you've ever done martial arts as well, you'll know that the routines are to create muscle memory and all the different things you do so that your responses are faster, so that your confidence is better, and the results tend to work a lot better. Okay, so that's what we talk about. Head and shoulders one-to-one approach. But it only works if you have a fixed strategy and you follow through, and that's what you stick to. And having one fixed strategy is really the goal here. Ultimately, you shouldn't care about how you make money, just that you make money and that you can make money doing this. Because you can go out and have any job. For most people, they can go out and try and get any job they want. So there are different ways of making money in life. And one way we want to do it is here. And it's not a game, guys. What I mean is, it's a sport. You can win and you can lose, and you definitely need to practice, and you need to improve that, and you need to rest, and you need to, if you do it for too many hours, if you're doing it for 5 hours a day, you will suffer cognitive decline. You'll make all your money in the morning, and you'll lose all your money in the afternoon for 2 reasons. 1, the market conditions change from the morning when the UK is online to when the US session starts. It changes. It's like a tide coming in and going out. And 2, you suffer cognitive decline. You get tired. You get emotional. And because you get tired and you get hungry, you get emotional, then you get ratty, and we do stupid stuff, all of us. Let's talk about this one. So most traders I know would rather go for a 3-to-1. So what's interesting here is that some strategies or some approaches, like trading with a trend, the probabilities of it going 1-to-1 or 3-to-1 are actually the same. This is very important that you understand this. If we trade with a trend and I get a really good entry and stop loss, the probability that it's going to go 3-to-1 or 1-to-1 are generally the same. But going for 3-to-1 means that when I make wins, my account really leapfrogs. So for me, either doing 1-to-1 with head and shoulders patterns or other similar patterns that have a very high probability of success is the way to go. Alternatively, it's got to be 3-to-1 and no less. No 2-to-1s, nothing. It's got to be 3-to-1 as a minimum on every single trade. And here's the thing. With the 1-to-1, you might get 6 or 8 winning trades out of 10. With the 3-to-1, you might get 6 or 8 winning trades out of 10. So this one becomes the goal for most traders to do that. Okay. So now that we've kind of covered, this is crucial. That 3-to-1 or 1-to-1 is absolutely crucial. The 3-to-1 works when you're trading with the trend. Let's talk about different ways in which you can trade the markets. Any market, any time frame, okay, is either not trending or trending. If we trade with the trend, it's the safest with the best average potential reward to risk, because the longer moves make us money. If it's not trending, I can be a buyer or a seller and the market can go the other way because there's no trend. No one's in control. It's 50-50. It's shifting. It's organic. It actually has lower volume. It's not great. So We need to be aware of that. Can you hear me? Sorry, can you hear me? Let me just check if you can hear me. Testing, testing, testing. Okay, that was weird. Thank you for letting me know. Sorry about that. All right. So there are three ways. So there's two types of market conditions: no trend or trend. That's it. Any time frame, anywhere you go, it's either no trend or trend, and it will move between them. And there's three ways generally of trading the market. So we're talking today about trading the market to earn a secondary or a primary source of income. And it's meant to be a thing we do most days. It doesn't have to be done every day. Sometimes Mondays are funny and Fridays are funny. So Tuesdays, Wednesdays, and Thursdays, a lot of the time, can provide opportunities. So the three ways of trading the market are: trade a range from top to bottom, sell, target it, stop loss up here. The reward to risk is good. The probabilities are good. Sometimes it'll go straight down. Sometimes it'll wobble, go up, go down, because it's ranging. No one's in control. But it is a valid trading approach. Then there's this one, which often scalpers find themselves in, and it's catastrophic to their accounts and their brains and their emotions and their experiences. They decide to sell because they think the market's turning around. So they decide to sell. They don't know where to put the stop loss because there's no place to put your stop loss. So they either don't have a stop loss and the market goes down a little bit. They don't take profits because they've only just gone into profit after the spreads. And then the market does this. Because of course it does, because it's trending. So now they don't have a stop loss in. They had profits, but they also didn't know when to get out. And now they're stuck in a trade going the wrong way. This one is the most common thing that most newer scalpers get into, and is the absolute most destructive way of just ultimately just destroys everything. Okay, so then the third way is to trade with the trend, waiting for that pullback. As I said, you've got your option. Anywhere in this area is our goal. That's the last point. That's a breakout because it's broken up to a new high, or we get a pullback. Anywhere in that area, it's going to be a pullback or a breakout. And there are certain patterns and things to look for. Okay, what about entries and stop losses? If we can, we want the entry to be above the high of a candlestick. Okay, so now we're trending back up. So it looks like we came back to this. What I'm going to do now is, these are really nice little setups here. We can go, for example, somebody might have an entry here, stop loss there. Because generally it now looks like it's trying to break up and go higher. We'll see if that's going to be the case. And we could see a breakup. So there and targeting here is a type of approach. Okay, so let's see what happens because we're on a 1 minute time frame. So we're going to talk a little bit how can we increase the odds of that. So let me explain why my reasoning was to do that. These two candles are very nice and bullish, really, really nice. So I also see this level here, so I want to break out of that. I can see that generally we are still producing higher highs. We didn't come back to this level, but we did come back to that level. And we're still trying to go. The market is still trying to go higher. But overall, it's not a super, super strong trend. Okay, so let's leave that for now. Is it a valid idea? Yeah, it's not terrible. Could it be a losing trade? Yes, it could. Okay, but let's talk about why it's a trade idea. First of all, we can see here we have an uptrend. Higher lows, higher highs. Here you can see there was a nice little flat level breakout. Don't be shy about looking at the body language of the candlesticks. Don't be shy about that. It's your brain will learn to read it. Like if you decided to learn to lip read, part of it is, yeah, in the beginning you need to listen to people and watch their lips, but over time, just guessing will actually get you somewhere in the end. Okay, so this is trying to push higher. So entry there, above the high, stop loss below the low, targeting 3 to 1, or if I can see where the next level is. So I can do 3 to 1 or target the next level if there's a big, big, big level. You want to know that. But for now, this is good. And ideally, this is very powerful. This is actually incredibly powerful. It's taking some money off the table. So all I'm doing now is I'm reading price action, okay? I don't want you to stress about reading price action. Price action is the ultimate goal. And the sooner you just watch price action, the faster your brain will pick it up. So even if you don't get it for about a month, you will eventually start to get it. You also need to understand that getting in here was a valid trade idea, whether it's a winning trade or a losing trade. That's the hardest thing to know as a beginner trader. You're like, well, it makes sense when you show me, but when I'm there alone, on my own, I don't know that. Okay, so generally speaking, when we look at what the market is doing now, it's trying to trend higher. We broke that one, but we did actually come back down. And actually, what I want to do now is talk about, so that was my suggestion was to get in on the break above that line, stop loss below the low here, and targeting this. That was my suggestion on this. Just going with it. Let's see what happens with that. While we're doing that, let's talk about something else. So there was something I wanted to talk about. So now it's patience. So now it's patience. And actually, it's really interesting. Some very good traders have said the outcome of the trade is not important. What you need to focus on is why you took the trade. And it actually, I mean, obviously, the outcome of the trade matters because you've got to make money. We have to make money doing this. And wanting to make money doing this is not a bad thing. And it's a learnable skill, guys. It is like learning a new language, learning a professional sport, or learning a musical instrument. I tell you that because if you've ever done any of those, you kind of will get a sense of, oh, okay, yeah, there's a lot of nuances and little things that I need to learn how to do. What happens as you progress as a trader is that, yes, trading gets easier. Your focus moves from being able to read price action and being able to handle a few losses. It moves to other things. It moves to like, okay, have I traded too much today? Am I being emotional, or should I be doing something else, or should I progress my skills? Which is why I do day trading in the mornings, then I do options trading during the day, and then I do swing trading, or I manage my stocks portfolio is like every other month, because I get entries in on my stocks portfolio on the weekly chart. So I might wait a month to get my entry to add to my portfolio. And so there's different types of focus, different types of things. Like there's a difference between playing basketball and swimming and playing cricket and playing rugby. They require similar eye-hand coordination, but they're different types of focus and the rules are different. So when I'm trading buying stocks, I have slightly different rules. And so you kind of want to pick one and then get to that, and then your brain will know how to do it, and then you move to other things. Okay. But the ability to read price action, ladies and gentlemen, is absolutely crucial, and don't be afraid of it. I want you to trust that the market is trying, and this is a very hard thing for newer traders to do, is to just trust the technicals. Okay, there we go. Target hit. Okay, now we have to see what happens because we're at a major level here. So what was the reasoning behind taking the trade? We had an uptrend here. I wanted to bring in the fib. That's what I wanted to show you here. So what was the fib pullback on that one? We had a pullback here to the 618. Now, you don't have to use Fibonacci, but if anyone who's watching today likes Fibonacci, then you appreciate this. What Fibonacci does and what pivot levels do is they just reinforce levels. If you see a Fibonacci level as well as a support resistance level, then that should tell you something as well. And a 618 pullback is fine. Beautiful. And it's a really nice setup. And if I'd gone 3-1, I'd be hitting 3-1 now. So you had a choice, but 3-1 is preferable. Okay. And so that was the logic behind that. And again, we can trade it. We can keep trading this. So what do I mean by that? Well, but you have to know why you're taking the trade. Why are we taking the trade? Well, it's trending. When can I take the next trade? So I'm curious if anyone wants to put in, I will give you 30 seconds to give me an answer. I've told you today there are two types of entries. So now that we've taken a trade and hit our target and we are waiting to see if there's going to be another setup, what should I wait for? What should I wait to see before I consider taking another trade setup? Okay. You tell me. So while I'm going to wait for you, I want you to give me some answers, guys. I've already told you the answers. I've almost just given you a clue now. I want you to tell me, what do I need to wait for before I take the next one? So is there anything else I can do to make this easier? And there is. Yeah, break of structure is great. Next one, there's something else. After a break of structure, what else can there be? What else do I need to see? But I'm loving this. Please give me this. So we've had a move, right? We've had an extension because every move has an extension and a pullback, or a push and a pull, or a phase one and a phase two. Okay? So what am I waiting for? Okay, so you've said reversal. I'm going to go with the pullback retracement as a reversal. So here I'm looking for a pullback. So how will I know when it's kind of done the pullback? There's a couple of things. So first of all, I could use trend lines, basic stuff, basic stuff. I also want to kind of mark this. So in other words, we could get a pullback to here and carry on. We could get a pullback to this area. Could happen. Let's see. I would prefer a deeper pullback. So the next thing is, this is a very cool little tip, very cool. Throw in a moving average. So throw in a 20-period moving average. This is where I was going with this. So we're going to use a 20-period moving average. There it is. Wait for price to come back to the 20-period moving average. So look at this. We get a trend line and we get a 20-period moving average. Where they tend to overlap, there could be something. So we're looking here. Yes, there might end up being a setup. We could get a pullback here. So the other thing I wanted to add in is sometimes we get a signal, we take the signal, but the market isn't ready yet. And then it triggers us in, stops us out, pulls back, then gives a signal and takes off. And that happens, guys. It happens. Sometimes it'll pull back to the 382 fib level and try to take off, and there's not enough buyers or not enough sellers or enough momentum, and then it'll pull further back. So look at this one. So now we're waiting for this to potentially come back, and I want to see a bullish candle form here. You can add colors, so you can switch it up, and we can go through and quickly change the colors of it if it helps you. In other words, you do what makes it easier for you to read everything, okay? So we're going to do this. We'll go with that. We'll make this red, and we'll make this red, okay? So we're going to change it now. So I'm looking for a green candle, which ideally will happen in this area if the trend is going to continue. I don't know if it's going to continue, because look at this. Here it kind of fell through that. But if it is, it should produce a green candle in this area somewhere. Okay, so that's what I'm going to be looking for. And then that will be my potential to kind of get in on it. Now, when I take trades throughout the day, I'm going to probably have 2 or 3 trades, and hopefully all of them will be winners, but I might have one winner, one loss. Then I'm like, okay, do I want to take another trade or not? And then potentially take that. So also, going from the 5 minute to the 1 minute should almost always be in the same direction. So if I take it on the 1 minute, it's in the same direction as the 5 minutes and 15 minute we're going, but I'm just getting my entry on the 1 minute, and that's the difference. And it moves very fast. So one of the things that I want to say to all of you as sort of big brother type of trader, if I'm your big brother giving you advice, is don't rush to go to the 1 minute. The 1 minute moves really, really quickly, and you kind of want to do it when you're ready. So if you're a really new trader, if you're in your first few hundred trades, there we go. That could be our setup. Let's have a look and see. I prefer it to come off a little bit lower now, but let's see what happens. I'm waiting for it. So it's got 40 odd seconds before it closes. So let's wait and see. So any kind of a green candle, even indecision, is beautiful. Indecision candles like this, doji, spinning tops, they occur at the turning points. So that could work out well. Okay, and again, my target is going to be, we'll see if this level's a problem, but otherwise I'm going to target ideally 3 to 1. So let's see what happens to that. We've got 19 seconds. It could also pull back a little bit further to this level. So, but that looks good. That looks good. So I'm going to wait for this to close. I could also arguably have my entry above, like trailing an entry down. But in this case, I'm going to pick the green one and go with that. So we've got wait till it closes. I'm going to put my entry here, stop loss here, targeting, let's say 3 to 1. Let's see how it goes. And spreads matter. So that brings me to this point here. You really want a very, very small list of spreads. And they should be, honestly, under 1 pip. Under 1 pip. Okay, if it's over 1 pip for 1 minute, 5 minute time frames, especially scalping, it is not feasible. It doesn't matter how good the trend is. It's not really feasible. It's very dangerous. So because you're going to be and it also provides you with fewer charts to have a look at. Let's see what happens. Okay, so my entry is above the high here. So raise it. That's my entry now. Stop loss, target 3 to 1 or whatever. Okay, let's see. I also like to take partial profits. I have a preference of taking partial profits at 2 to 1, for example. Hasn't triggered, that's okay. Remember, what I'm doing is saying if the market is going to continue, then it should do this. Okay, and if it doesn't do it, then I move on. The 20-period moving average. The beauty of this is that when it's trending really well, it usually will take off from the 20-period moving average. It's a really good organic trend line. So if it's above it, it's bullish. Okay, so here we go. We're going to wait for this one to close. Why is this one great? Because it's coming off support and resistance, guys. The basic stuff. Support and resistance. Beautiful. This one is a better setup because of that. And it probably is also off a fib level. You don't have to have all that stuff. You can keep it simple. I want you to remember to keep it simple. And finally, the one more thing that I'm going to add to this, we've got 20 seconds. I'm going to add a MACD to it. I've got a MACD here. So I'm just going to create a MACD and add it here at the bottom. I'll go through that in a moment. I want to quickly just move in a bit, see what happens. So here's what I'm going to do. If this closes green, 2 seconds, this is what I'm looking at. There, stop loss here. Let's see what happens. Okay, let's see what happens. So entry there, entry above the high of that candle, stop loss there. Let's see what happens. It's still going down. Okay, cool. So we've got that trend line. We fell through that one. We're coming back to this one. Let's see what happens. Okay, so let's talk a little bit about, so my entry would be here, for example, and my stop loss below the low here. Let's see what happens. And 3 to 1. So while we're doing that, let's talk about the MACD. The MACD, if it's used correctly, and this is really, really important, we do not do oversold and overbought. That is not the best approach. It's not the best approach. So also I want this to be a nice, strong, bright blue there. And I'm going to take the histogram away. So I'm just going to keep it simple, nothing too big. I only need the one. I don't even need this one. Very straightforward, make it nice and thick. There we go. So that's it. I've got the MACD. There's another bullish candle. So I could potentially entry here, stop loss there. We're still in the right area. Let's see if this happens. So the MACD is very good for telling us how the momentum of the market is moving. Is it bullish or is it bearish? And the best way to use it, without doubt, very, very reliable, again, is if price is trending higher, high lows, high highs, and the MACD is trending higher, and both are bullish, the trend is strong. So that is a very powerful extra tick in the box. Let's see what happens over here. So my entry is above the high of this candle, stop loss below the low. Targeting 3 to 1. We'll see how things go when we get there. Let's see how it goes. So I'm still happy with that. Still keeping my entry there. Same place, same thing. Looks good. It's trying to turn around. You can see it's trying to turn around. These last 4 candles have all stayed in the same place. Again, it's trying to turn around. Doesn't mean it's going to succeed in going all the way back up, but it is trying. Okay, so let's see how this goes. Okay, boom. We're in the trade. Now we're in the trade. Let's see if it's a winner or a loser. Spreads matter, ladies and gentlemen, hugely matter. Ideally, I want to take off profit. So if that's my 1-to-1, I want to take partial profit at 2-to-1. So take 50% profit here and then trail my stop loss after that. So we're still generally bullish. We're more bullish than bearish. The market is moving. It's beautiful. It's nice. Okay. And it was nice that we did it on euro dollar. Euro dollar's got very tight spreads. What are our spreads at the moment? Go over here and have a look. It's on a demo account, so it doesn't really matter, but let's have a look. Where's my spreads? 0.5, 0.7, it's beautiful. It's fine. So again, as I said, let's see what happens with it. We're in the trade. Is it a good trade? I'm happy with it. In principle, we are bullish. It's not the best trend because it's got very deep pullbacks, but it's also not terrible. We've got a beautiful break and a retest of support and resistance. We've had multiple attempts for the buyers to try and push, so they look good. The MACD doesn't tell me anything in this particular case. You see the market goes up and comes down, and the MACD is going up and coming down. So MACD is not really telling me anything at this time. Okay, so entry there, stop loss. Usually, I like to have the spread as a gap. So if the spread is half a pip between the low of the candle and the low, and half a pip on top of that. So ideally you wanted some type of tool that allows you to do this really quickly, that it presets a 3-to-1 target, that it presets taking in, the then it presets taking in partial profits and stuff like that, just so that you don't have to worry about that too much. Okay, let's just go back. I want to have a look at the other items on the list. And so the mindset is important, because losing trades hurt. It's a relationship we have with the markets, and when it's a losing trade, we get dumped. So we have to learn to understand that actually it's not a single trade approach, it's a multiple trade approach. But every trade we take must be part of the same approach. It's got to be the same strategy, it's got to be in line with the general market. This is stumbling now, so I would have it should have carried on. So it hasn't carried on, so I should either consider exiting the trade now, which would be a half trade loss, or just leave the stop loss in and allow probabilities to play out. So I'm curious, I want to allow the probabilities to play out. I want to see if it finds support at this trend line. And yes, can you sometimes just get tapped out and then it carries on? Of course you can. That's what we would call, that would be a good trade, but a losing trade for that exact reason. So this support level is being tested right now. The market is trying to test it to see if it's going to hold. Let's see if that's the case. How to trade 1 and 5 minute charts to find the short-term opportunities. So we should also see what's going on with the 1 minute, the 5 minutes, and the 15 minutes. Are they overextended? Do they need a bigger correction? Let's have a look and see. So trading a single time frame is an approach, but I also like to have a sense of what's going on in the higher time frames. And the most popular scalping strategies. So we spoke about this in the sense that 1-to-1, 3-to-1, which markets, it's got to be tight spreads, so it has to be liquid. So it could be something like gold, it could be sterling, so it could be GBP, USD. So these are not bad. Anything with where the spreads, average spread is under 1 can sit on my list. So it's worth your while to be able to go through this or keep an eye on these and create currencies are great for scalping for that particular reason. Okay, it really wants to break through the support level. Let's see what happens with this. Okay, so it's broken through this general trend line. So it's now more bearish than bullish. Let's see what happens with it. And so you want to create a list of currencies and then potentially add gold to that. Those, in my experience, tend to be the best for scalping purposes on the 1 minute time frame. They're highly liquid, spreads are incredibly tight, and they can have very, very good valid setups. Okay, so that tends to be the kind of best stuff that we see. Let's have a look. This is looking more and more obviously like it's now going to get stopped up, but I want to see how that goes. And you know, low volatility assets are often preferable for scalping. So what does that mean? Well, sometimes we're looking for a very small move in a gentle market. So we don't want the market moving at a really quick pace. We want it moving, but just not at an incredibly gentle pace. And that can sometimes be the case when we have a look at, say, the Asian session. So if I'm at my desk at, say, 6 a.m. in the morning, there's the tail end of the Tokyo session. And I might want to make sure that I'm looking just for a very small move or breakout of a consolidation. Those are the kind of things that can happen. So the support level is really trying to hold. Okay, let's see what happens. If it breaks this high now, then that's obviously a good sign, because what does it tell you? If it breaks this high, that tells you, yep, there's a bit of a range battle happening here, and then the buyers will take control. Especially if it's ideally a breakout and a close. Those are momentum candles. So when you have this patch here where it's stuck in this little bit of a range there, when you get this candle here, this little candle was a really nice breakout and a close, and then it carried on. Very small stuff. Look at this little patch, little consolidation here, flat level breakout. There's your momentum candle. Let's have a look and see what happens here. So there we go. It's a good break. Look, it broke above that high. Now what that is hinting at is that the momentum is there. Let's see if it keeps going. If it comes back below the level, not necessarily a good sign, but it looks good otherwise. Okay. So let me recap. Yeah, let's see if it fails to get out. It's trying to get out the range. This is a range. From there, sorry, to there is actually now stuck in a box. You don't know that until you see a few touches. You need to see 1 touch, 2 touch, 3 touch. Then you know it's kind of, that is your minimum requirement for range. So let's have a look at that. Okay, so we'll come back to this in a moment. Let me bring up my notes. Scalping, those are the time frames. You would potentially start on the 15-minute, which is moving slower, then go down to the 5. So do 20 to 50 trades at this time frame, go down to the 5 minutes, 20 to 50 trades at that, and then by the time you get down to the 1 minute, you've mastered your strategy, your entry, your exits, and actually you can handle the faster moving markets. Always trade with the trend. All right, every entry is either a pullback, retracement, or a breakout. Okay, we so far have gone for a retracement. We can trade in line with the higher time frames, absolutely. The higher time frame is actually this bigger picture. It's really battling there. It's really battling. When it breaks through this, it's going to move. If it breaks to the upside, it'll move. Here's the bigger picture trend, okay, for now. But notice we have a lower high here. So that's bearish divergence. So you've got that and you've got that. So maybe that's what's battling here. Maybe I need to have a look at the higher time frame. So let's see what the 5 minute looks like. Oh, boom. So now it's like, oh, okay, I get it. We got a flat level here. That's why we're battling. There we go. Again, once it breaks beyond that level, later in the day today, we could get there. There we go. All of a sudden, I'm like, that's why it's battling at that level. Okay, this was a failed attempt then. It was a breakout pullback. Now it's trying again. That's pretty cool. It's trying. That level is a much more important level. So that was market structures key. There we go. What are the important levels I need to watch? Bingo. Use the 4 hour for direction if you can. If the 4 hours trending or overextended, you want to be very cautious. Okay, so the 20 period moving average really works because if price is far away from the 20 period moving average, it's overextended. You need to wait for it to come back. You want most of your entries should be close to the 20 period moving average. And then understand probabilities, risk, reward, and statistics. Okay, it's trying. It's so desperately trying to get to break free of this level here. I'm going to get rid of this one here because right now it doesn't really matter for the purpose of that. Come on, break free. Come on. It's trying. It's trying so hard. So it is at a major level and it could actually fail. And again, I can take profit now. I'm technically 1-to-1. I'm up from that area. I'm up 1-to-1. But it really is trying. It doesn't mean it's going to succeed. It's got to break. Push. There's another level. I'm going to adjust this. This is the level now. It's really trying. If it breaks this, it should go. Come on. Come on. Boom. Okay, go. Okay, that's experience talking. You have to see the market move for a couple of years before you really get a sense of it. And actually, if you just focused on just 1 minute trades, because the reason is it was battling to get here and it broke through it, and then it was battling here, and I thought, okay, if it breaks this, then it's broken through 2 walls. The momentum is clearly now more bullish than bearish. And you have to kind of not take it too seriously. You've got to treat it as a sport. You can train well, you can do well, and you can have a day that doesn't go your way because the market doesn't go your way. Or you can be in a foul mood and your mood can change and you can get in your own way. You can be the problem. So what you try to do is progress as a trader to remove yourself as a problem. So you're not the problem. And then mainly if you have losing trades, it's usually the market and not you. And that takes practice. There we go. That's a clear failure to get through that level. Look at that. Okay, but would I have hit 2-to-1? Before I wrap up, before we go, would I have hit 2-to-1 on this? I can't say for sure. I might have made it or not made it, but even now I can get out of the trade if I'm not happy. I would say if it breaks back up above the level, we're good. Okay, but I'm going to leave you with that because we need to wrap this up, and I'm just waiting. If you want to keep watching on your side and let's see what the outcome of it is, but I don't want to keep you any longer than we need to have on that. I'd really love to see it break back up above that level. I think it's starting to weaken a bit as well. Look at the 20 period moving average. Oh. There we go. Okay. All right. Cool. It's good. It should be good. So that should go on. What I'm going to do now is I would take my stop loss and move my stop loss to my entry. So it's a no-lose trade. Take partial profits again, and then ideally we're fine. That's good. It's closed above that level. Should keep going. Come on. Maybe it'll come back down and tap here. Might come back and tap this level here and then go back up. Let's see. Just stay with me. Let's see what happens. Oh, let's see. Breaking above this high is also a good sign. So what you're actually seeing now is a battle where there are more buyers than sellers, but only a little bit more. It's not like 80, 30, 80% buyers, 20% sellers, or 70, 30. There we go. Come on. Break. Push. I think it's probably going to go on. But I would definitely be taking some profits off the table, 2-to-1, and updating my stop loss on that. Okay. So sometimes the trade wobbles before it gets to its target. Sometimes it just goes straight to the target. Cool. Ladies and gentlemen, let's wrap it up there. That was great fun. I enjoyed that. I love that. I love day trading. It's absolutely awesome. I hope you did too. I hope that you found that you picked up some tips on that. If you did, do me a kindness, please. Let Vantage Markets know that somehow. Social media or something. They don't know. They're not necessarily watching the webinars. If you did enjoy it, if you want to see something else, if you didn't enjoy it, if you have a problem, you can do that as well. But yeah, if you did and you found, please let them know. If you like this, you want more like this, you need to tell them. You just tell them, they'll give you what you want. So absolute pleasure for me. I want to say thank you for your time. I really appreciate it. I look forward to seeing you in future webinars. One last look at it. I want to see where it's going. It's really battling here. It's fine. We'll see how that goes. And that's it. I'm going to leave you with that. I'm going to end the webinar now, and I want to wish you a wonderful week and weekend that's coming up. And it was great fun. All right. Thank you very much.